Welcome to RichTricks. I am Mr. Mio. I am your Make Money Online guru. Let's get started with today's video.
Forex technical analysis. Trade like a bull. So on this channel, we discuss about finances and how you can make money online, guys. So if you want to make money online, make sure you give it a like and subscribe to our channel so that you won't miss our latest drop guides. So in today's video, we want to talk about how to use technical analysis to trade Forex like a bull. So now, let's go to the next page. So, trading Forex without understanding technical analysis is like trying to drive with your eyes closed. You are basically guessing. So, if you want to trade like a bull, you need to learn how to build the language of price action. So, technical analysis helps you make smarter trading decisions by analyzing charts, patterns, indicators, and volume. So instead of relying on emotions and guesswork, it doesn't predict the future, but it gives you a framework to understand what the market is likely to do next. So now, let's go to the next page and see the steps. Step 1. Start with wide chart setup. So the first step I have is start with wide chart setup, guys. So before you analyze anything, you need to set up your charting platform. So tools like TradingView offer powerful visual analysis features. So choose candlestick charts, not line charts, because they give you more information about price movements. Use a clean background and avoid cluttering your chart with too many indicators. So the goal is clarity. Start with key time frames, the daily chart for bigger trend context and the 1 hour or 15-minute chart for entries and exits, guys. As you can see right here in the chart, this is a daily chart. Let's switch to daily, so you can see this is a support and a resistance line. So all these things are what you need, guys. So this is TradingView. Now, let's go to the next step. Step 2. Understand trend lines and market structure. The next step here says, understand trend lines and market structure. The first thing a bull looks for is a trend. Is the market moving up, bullish, moving down, bearish, or sideways, consolidating? Identify these by looking at swing highs and swing lows. In an uptrend, price makes higher highs and higher lows. In a downtrend, it forms lower highs and lower lows. So, avoid trading against the trend. It is like swimming upstream. Use trend lines and moving averages like the 50-day or 200-day EMA to confirm the market's direction. So, guys, as you can see right here, this is what is meant by trend. Now, see, this is a lower low, lower high, lower low, lower high, lower low, lower high. So right here, from this point, the trend is on a downtrend. So here, you only look for sell opportunities. And when you check the price right now, higher high, higher low, higher high, higher low, higher high. So here, you can see an uptrend. And right here, this is a consolidating market, guys. So this is how to identify your chart, guys. It's not rocket science. Now, let's go to the next step. Step 3. Master support and resistance zones. The next step here says, master support and resistance zones. Support and resistance zones are key levels where price often reacts, either bouncing or breaking through. Support is where the price tends to stop falling, also called the demand zone. Resistance is where it tends to stop rising, also known as the supply zone. So, draw a horizontal line on your charts where price has reversed multiple times in the past. These zones determine your entries and exits. So professionals often wait for price to test these levels before jumping into a trade. As you can see here, for example, this is a support line. So, this is the support line right here, and you can also call it a resistance line right here. Because when the price breaks, the price comes back to retest. At this part, it forms as a resistance line, and at this part, it forms as a support line. So that is how to draw your support and resistance line, guys. Now, let's go to the next step. Step 4. Set entries, stop loss, and take profit points. The next step here is set entries, stop loss, and take profit points. Never enter a trade without a plan. Use technical analysis to define your entry level, stop loss, and take profit before placing the trade. Your entry should be near key levels like support or a trend line. Set stop loss just below the invalidation point where your trade idea no longer makes sense. Set your take profit based on logical targets, like the next resistance or measured move. Poor traders always think in terms of risk to reward. So aim for at least 1-to-2 or 1-to-3 ratio. As you can see right here, this is our previous entries, guys. So this is what we call risk to reward ratio. As you can see here, this is a 1-to-2 risk to reward ratio. So this is how to set your risk to reward ratio, guys. Now, let's go to the next step. Step 5, backtest your strategy before trading live. The next step is, backtest your strategy before trading live. So once you build your system using technical analysis, test it. Go back to historical data and see how it performs. Would your setup have worked? How often? What's your win rate and average returns? So, backtesting helps you build confidence and refine your edge. So don't risk real money until your setup works consistently in simulated conditions. What you need to do is backtest, draw the previous chart and then test to see if you have a winning strategy, guys. So that's just all about Forex, guys. Now, let's go to the next step. Step 6, stay patient and avoid overtrading. The next step says, stay patient and avoid overtrading. Poor traders don't trade every day. They wait for quality setups. Most of the time, the best trade is no trade. Technical analysis isn't about predicting every move. It's about spotting high probability movements and executing with discipline. So if your setup isn't present, stay on the sidelines. Emotional trades, formal entries, and random decisions will destroy your account. So always stay patient when you want to enter a new trade. Step 7, review your trades and improve. And let's go to the last page right here, which is review your trades and improve. After every trade, review your chart. Did your analysis work? Did you follow your rules? Keep a trading journal and log your entries, exits, mistakes, and lessons. Over time, these feedback loops will help you sharpen your technical skills and trade more like a professional. So that will be all for today's video, guys. If you enjoyed this video, make sure you like and subscribe. And with everything we just discussed now, I'm sure you should be able to identify your chart and make money in the Forex market, guys. So see you next time.